Look, my view of Bitcoin is if you value it as digital gold, it's better gold than gold, as Anthony has said before, and that makes it worth 20 trillion. And if you think of it as digital property, like a digital hotel in cyberspace or digital real estate, well, it's going to demonetize a lot of real estate and a lot of property, and that makes it worth 100 trillion. And if you think of it as digital money or digital energy, because you're going to move it a million times a second and split if Bitcoin's going up a factor of 100, all I got to do is hold it, right? But if you told me Bitcoin is only going to go up by a factor of 10, if I've got a public company, my strategy is I'm just going to lever it. Right? So I mean, just show me alpha. If you're going to give me plus 10%, okay, I lever it 10 to 1, I get plus 100%. So our strategy is a levered long Bitcoin strategy. Look, we had $500 million business growing 0% a year. We had a $500 million treasury paying 0% interest a year. When the lockdowns came, we realized that we could generate about $100 million a year in cash. And we also realized that the money was going to lose about 20% of its purchasing power a year. And my simplistic math was 2,000 people work for a year to make 100 million bucks, and then we lose it all because of inflation, which meant that if we work forever, we get nowhere. Or to use a famous phrase, the road to serfdom is working exponentially harder for a currency growing exponentially weaker. So we decided that rather than stay on that rat race, we had to do something. And the big observation is that most balance sheets of corporations are composed of cash and credit. And I would say they're crumbling cash and credit. If you're sitting on 500 million in cash and treasuries and you're getting an effective 1% yield or 2% yield or less, if you wanted less than 5-year duration, you can't even get 1% yield. So in that environment, you got a negative real yield of minus 15%, minus 20%. The S&P 500 is up 25% year over year. So your cost of capital is 25% on the money. You're getting 1% yield. You're minus 24%. So you're destroying shareholder value at a ridiculous rate. You know, and by the way, John D. Rockefeller invented chemical energy. He put energy in a bottle called Standard Oil. If you think about Standard Oil, what the name means is he standardized the delivery of chemical energy in a container so that it was clean and predictable. So John D. Rockefeller standardized something. It took 40 years, 50 years for people to get their head around what that meant. When electricity came along, if I knocked on doors in New York City and I said, hey, I got electricity, lightning in a bottle, you can put it in your, in your house, in your ship, in your, sewing machine factory, in your restaurant. Are you ready? People in the first year aren't going to get that one either, right? Someone's going to burn their house down. Someone's going to get electrocuted. Something's going to catch fire. Someone's going to say, don't let that guy put that in my neighborhood. Could you imagine going into your apartment in New York City in 1905 and saying, I want my apartment to be the first one wired for electricity? So I mean, the point is, other major breakthroughs in energy also took decade or decades. And it's totally reasonable that maybe the lone investor, they go first in the small business and then the larger business and then the small city and then the larger city and then the company, and everybody finds their way to the future.
And Michael, in fact, you own Bitcoin and nothing but Bitcoin. No Ethereum, no DeFi, no other coins, etc. Is that still your view, Michael, that it's Bitcoin, nothing but Bitcoin?
Look, our business strategy is we're a Bitcoin property company. So we acquire and we hold Bitcoin.
And so do you have a number in mind of what you think is going to be at that end of the 10 years of what Bitcoin's price might be?
Look, my view of Bitcoin is if you value it as digital gold, it's better gold than gold, as Anthony has said before, and that makes it worth 20 trillion. And if you think of it as digital property, like a digital hotel in cyberspace or digital real estate, Well, it's going to demonetize a lot of real estate and a lot of property, and that makes it worth 100 trillion. And if you think of it as digital money or digital energy, because you're going to move it 1,000,000 times a second and split, when the hotel gets split into 1,000,000 little hotel minutes and rented out around the world and recomposed and moves at the speed of light, then I think it's worth a lot more than the 100 trillion. It becomes worth a $250 trillion plus thing. So I think Bitcoin's going to go up with volatility and some cyclicality over time.
So you're looking at substantial upside, 10x to 200x.
People forget that what they're missing is this is a technology. This is the creation of digital property or digital energy, or and I mean, digital gold is a small thing. Digital property and digital energy is a big thing. If I told you I invented electrical energy, and we keep and the core business remains the same and is better than ever because it's been helped with the halo of the Bitcoin strategy. I think we're doing great. I mean, a year and a half ago, no public companies had any Bitcoin. By the end of this year, there'll be 36 public companies. And you got a dozen Bitcoin miners coming public. You got Bitcoin miners buying Bitcoin. You got Square and Tesla buying Bitcoin. You got the ETFs coming out. Yeah. So I feel like we're having about as good a progress as we can have in 12 months. We decided we either had to give the money back to the shareholders or we had to invest it. We split the difference. We offered to give half of it back to the shareholders in a Dutch auction. And then we took the other 250 million and we bought Bitcoin with it because that was the hardest asset, the highest quality property that we thought we could find as an inflation hedge. The strategy worked well. The shareholders loved the idea. So they didn't tender all 250 million worth of shares. And we ended up with 175 million more in cash. We invested that in Bitcoin. We had 425 million in Bitcoin. Bitcoin traded up. Then we had $1 billion in Bitcoin. We generated a bunch of cash flow. We sold some convertible debt. Then we had 2 billion in Bitcoin. Bitcoin traded up. We raised another $1 billion at 0% interest, bought some more Bitcoin. It kept going, then it traded down. So we issued 500 million in senior debt at 6 1/8% interest. And we bought Bitcoin in the mid 30s, traded up a little bit more. We sold $400 million of equity. We bought some more Bitcoin in the mid 40s. Now Bitcoin's above 60,000. To make a long story short, we got a $500 million software business growing maybe 10% a year, generating 100 million in cash flow. And we have a 7-point-something billion digital property business growing at the rate of Bitcoin. And we've transformed ourselves sort of into a property development company. But the property is digital property in cyberspace. It takes a lot of effort and energy to do the diligence and go through the accounting and the legal and the security and the operational exercise to safely and efficiently acquire and hold Bitcoin. You can't underestimate that. So once we get that, and it took a lot of energy for us to adjust, to rotate our shareholder base, right? So if it took me a year to get a shareholder base that was comfortable owning Bitcoin, the last thing I want to do is go back to my shareholder base and say, oh yeah, I'm also doing baseball cards and NFTs, and I'm going to do some rare art, or I'm going to do some venture capital, right? So we're a public company. And once we have a good idea, like Bitcoin, if Bitcoin's going up a factor of 100, all I got to do is hold it, right? But if you told me Bitcoin is only going to go up by a factor of 10, if I've got a public company, my strategy is I'm just going to lever it. Right? So I mean, just show me alpha. If you're going to give me plus 10%, okay, I lever it 10 to 1, I get plus 100%. So our strategy is a levered long Bitcoin strategy because of the operational and the financial and securities elements related to a public company participating in this space.